Grand Rising family, Grand Rising, Grand Rising,
Grand Rising.
Grand
Grand
Rising.
Rising.
Presence.
Let's get into it, guys. I hope you was listening to the motivational videos this morning. Was saying some interesting things to make you think about what you want to do this week, what you want to do for the rest of the year. Remember, we are now in February, 1 month down. Yeah, 1/12 of the month gone. All right. So, all of those dreams, hopes, plans, they have to activate. Because believe me, just like last year, 2024 will absolutely fly by. All right. Especially if you're not, living in your truth and pursuing the things that you want to go and pursue. It will fly by. Before you know it, it'll be 2025. All right. Imagine what that sounds like. 2025. All right. That's what it will be. So, guys, good morning. God bless. Hope you had an absolutely fantastic weekend. And now it's time for us to activate and get busy here in the markets, put our education to good use. A lot of us are looking forward to when we're going to go and do our United Challenge together. Okay, I'm going to put some marketing out for that so I can start taking subscriptions. Who's going to be people registering, who's going to be doing it, so we know who's doing it, so we know how many people to add to the separate group, etc. I know there's a lot of people that are quite excited getting their capital together, make sure they're going to get their account, whatever size account that is, and we're going to proceed. All right, so let's go have a look. I am going to start off. We're going to have a look at US 30. We're going to also have a look at GBP USD, etc. We're going to have a look through these markets. So we're going to try and look for, we'll look for opportunities for what's potentially looming. All right. Like I said, when it comes to education, it's very difficult to do it from now, like looking at what's happening right now, because we can't play it out so that you guys can learn anything. All right. We just got to say, okay, yeah, later on this might happen. Now, if you missed that move of what might happen, or, if what I thought might happen doesn't happen, that doesn't mean it doesn't justify the education. It just means it didn't happen. Because the first thing I know about the markets is I don't know what the markets are going to do. All right. The markets can do anything. All right. So that doesn't mean if you think the market's going to do this and it does something else, that your education, your understanding of the markets are incorrect. It doesn't mean that. It means that the markets are volatile. The markets do what they want to do, and there's nothing you can do about that. All right. So we will try and look for some opportunities or for some potential things. For example, it's very easy for me to just say this basic. What's happening with GBP USD, guys? If this is GBP USD, what's happening with it right now? What's happening with GBP USD right now, this minute? Can anybody see? Anybody see what's going on with it? Nobody? Well, it's going sideways. It's consolidating. Thank you. Good morning there, Tal. All right. It is consolidating. It's going sideways. Okay. It's in this little yellow box. And that is actually at the top, have a look, of a bigger range. All right. So what I would say, if you're somebody and you're like, Jay's just doing education, I want something now, something that I can look at that's going to actually happen in the future. Well, I'd say to you, you want to keep your eyes peeled to see whether that is going to break outside of that box. That's what you're interested in. You're interested to know whether or not this is going to break outside of this yellow box. There is a smaller box that I put in here, a red box also, but you want to see. Now, if you can't see what's going on here, watch me drop my time frame. Looks a little bit more consolidation, right? It's a little bit more obvious, all right? And if I went down smaller again to an hour, even more obvious how this market's been going backwards and forwards within this range, all right? So ultimately, what I'll be saying to yourself is place an alert below this range. So this is GBP USD. If you're looking for something, place an alert below that range. This one's going to be crossing down. I want it to ring. Place an alert above the range over here, which based upon what the market has been doing, I don't believe that necessarily it's going to want to. We might see a liquidity grab. It's not impossible. We see this market come back up here just to be stubborn, do something like this, and then start doing this, especially if there's some news and some other stuff happening. It's not impossible that happens. But ultimately, I want to know what happens outside of this yellow range. There is a smaller range in here, which is this little red range in here, which, it is a smaller little range. The market came, but either way, that yellow range is really the milestone, all right? And down below here. So if I was to put my alerts on so you can see them, look, I've got alerts like that, either side of this range. There you go. That's one potential setup. And what we're waiting for is on a decent time frame, okay? Maybe like your 15-minute, all right, time frame. You're waiting for some sort of indication, some sort of correction, some sort of continuation. all right? If you're good enough, when the market starts to continue, you might be able to get in up here. Yeah, and when I say if you're good enough, what do I mean? I just mean if you understand the strategy inside and out, and then you see the market break structure here, make a retracement and correct, you may be able to get in here with your first target being this low. And then your second target to be beyond, trading towards some sort of structure that you can see over here. All right, in that direction. Okay, but either way, that's what I'm waiting for to see. It's Monday, it's a new week, all types of things are happening in the world. Yeah. And I want to see whether the market, what's going to happen outside of this yellow box. That's me, GBP USD, tucked away, done, dealt with. US 30, let's have a look. I'm going to wipe the US 30 chart. I'm going to start all the way from the tippy top so you guys understand how you should be marking up charts. So how you should be marking up charts is first and foremost, let's go to our Russian doll. Don't want anybody to forget about the Russian doll. All right. I don't want anybody to forget about the Russian doll. I don't know why I'm in Bing. Nobody wants to Bing anything. Well, somebody's forcing me to use Bing. All right. Let's click on this. It's moving very, very slow for some reason. All right. The Russian doll theory. All right. This is something I've come up with for myself, the Russian doll theory. And it's basically just turning around and letting you understand how the markets are. The markets are top down. Do you understand? Like, this is the structure for this. This is going to be the structure for this, and so on and so forth. Therefore, this can go into this, these two can go into this, these three can go into this, and they all fit inside of each other. Meaning, this is the larger time structure, weekly, monthly. This is your daily. Then it goes to 4 hour, then it goes to 1 hour, then it goes to 15 minutes, then it goes to 5 minutes, 3 minutes, 1 minute. But they're all contained within each other. This 1 minute can't be bigger and a completely different shape to what's going on over here. It just won't fit inside that structure. And this is exactly how the markets are. So when we go to our US 30 like so, and I zoom all the way out because I want to see what that bigger doll looks like. Do you understand? I want to see what that bigger doll looks like. That bigger doll looks like I put in some lines. First line I'm going to put in is I can put in a line like this. Okay, right. So this line I've put in is touching these data points. So the people that don't understand why that line looks like that, I'm going to explain it to you. That line, if I can draw it a bit better than that, is kind of looking like this, touching this data point, some data points in here. Then we've got this scenario, which I know just out of experience is something called COVID-19. COVID-19 lick and did a Mazzolini, all right? So what we're gonna do from here is we're gonna connect some of these lines, all right? So this is from COVID to this, this is from COVID over here to this data point, touching this data point, all right? Now, these are just data points. What does that mean? They're just bits of previous data showing us structure of how the markets were moving. So as you can see here, what I've done is I've taken a parallel line. Let me try and make this one a different color so we don't get confused. I've taken a parallel line, which is these two yellow ones, and I've moved this one all the way up here. At the moment, the market, if we're taking into consideration this yellow range, is in the middle of that range. It's not the best. I don't like necessarily to trade within the middle of a range. But at the moment, that's where that market is. Now, what we could also do is we could also take another parallel line here and put it on the top of this action here. Let me get rid of that. On the basis that the market came up here, touched here, came back down here. Maybe we're trading within this range. Maybe. We can see that over here was a place of liquidity, where the market grabbed that liquidity, made a little run in the opposite direction, but then continue to push up bullishly. All right. Now, if we're gonna go and zoom down, because yes, we're looking all the way back into the start of time, 10, 15 years ago, but as day traders, we're more interested in what is going on right now. So what is going on right now is I'm gonna draw a line like so. I have to draw this line like this because this is the last swing low before this highest point. All right. And that's creating a little range that this market was trading up within. Yeah, it's trading up within this range. Yes, there was an impulse like that. And then we had a little retracement back down into here. And then another little push so far. But that is where we're at right now. Now, based upon that yellow range, if this is in fact a yellow range, because remember, I've only taken it from these two low data points, these two bottom data points, and I've pulled it out to this top end, this first data point here. If the market's going to turn around here, which I don't know it is, all right? I don't know it is. If it is, we're looking at it that this is the top of a range, and it may be in sell territory at the top of this yellow range. But we already said that there's a possibility that this is the top of a much bigger range, and therefore we're in the middle of a range, which is kind of like, yeah, I don't really want to do too much from the middle of the range. However, that's on a much, much bigger time frame. So we're looking at this Russian doll, and it's a much, much bigger time frame when we're kind of potentially want to take trades in here. So though this is very important, there are still opportunities here. It's just not 10 out of 10 out of 10 out of 10 out of 10 at the top of the top of the top of the top. Do you understand what I'm saying? So we have to understand that. It colors our decisions, all right? So let me drop my time frame down some more. 4-hour time frame, okay? And the 4-hour time frame is still significant. Like, who's sitting around for 4 hours to see one candle? It's still a long time, all right? And what we could do is we could turn around and say, okay, based upon how the market's been moving, you know, we could put a top end of this range like so. Again, it's just a parallel line from here that I've pulled out, showing the market's narrowing in here. Now, ultimately, I don't want to really get involved in this market until we start seeing prices breaking outside the market. I'm not going to lie to you. I don't want to get involved too early until price breaks outside of one of these ranges. At the moment, everything's been contained within the range. We're contained within this yellow range. We're contained within this blue range. We're contained even within this narrow range. All right. So though I'm itching to hit the button and make some monies, I have to understand that I want the market to do something different, because the market is essentially bullish, making higher highs, higher lows, and it's bullish on a larger time frame. Have a look on that yellow type range. Yeah, it's bullish. That yellow range is going up. All right. And we're in a bullish impulse at the moment. All right. So we're bullish. We're bullish. The only problem is when we may be approaching a ceiling, because even when markets are bullish, even when markets are going in one direction, we understand that they like to retrace because they move in waves. Yeah. Then they go. Then they retrace. So just because it's bullish, I can't just start buying over here because I'm going to lose, because the market's in a retracement phase. It's like when you breathe. You breathe in, then you breathe out. I don't know anybody that just breathes in all the time. There comes a point where you have to breathe out, even though we need oxygen to live. Yeah, we can't just keep sucking it in. We need to breathe out at some point. Yeah, get rid of certain things. We need to breathe out. All right. So yeah, so you can see over here where we are in the markets on a daily. If we drop down to our 4-hour time frame, because the market trading within this range, making higher highs. So even if we look here, in this little phase here, we can see that this market was going sideways. Yeah, in this little box here, the market was going sideways. From Wednesday, the market was trading within this range. Then we broke that structure indication. Then we corrected. Then we continued and started pushing up a little piece. But it's not very emphatic. It's not very dramatic, huge impulse of a push up. But we've seen a strategy happen here also. Look, same strategy. Indication, correction, continuation to wherever it closed up above, and the market continued to push up from then. Yeah, we saw a huge push down here. All right, from the top of the range, boom, push down to the bottom of the range. Did some more consolidation in here. Have a look at the consolidation in here. Can you see? Let me drop my time frame some more. Consolidation here, look, just doing the hokey cokey. Then we indicated, we corrected, we continued. Then we got up to the same level again, which is another little level in here. And the market just consolidated in here on a smaller time frame. All right. Push down, close them imbalanced, push back up in here. It's about reading these candles. So right now the market got to the top of the range, once again, had a reaction, a bearish reaction. Have a look. Got to the top of the range, had a bearish reaction. And now, ultimately, right now, this minute, yeah, the market is trading sideways within this range. So if we're looking at what's happening right now, this minute, what I'd say is if you're looking at US 30, you could pop some alerts around this consolidation just to see whether this market is going to break up to the upside or break to the upside, or it's going to break to the downside. All right. Or break to the downside in regards to what's going on here. So we can see here that the market was, you can put a line like this. All right. I've done it like this because this is the last swing low before this big swing high over here. Yeah. Now, obviously on a smaller time frame and this impulse, we can put another angle coming in here like this. all right, touching this swing low before this highest point here, okay? And even on a smaller time frame, have a look on the 5 minute here. I could have put another angle in here from here, going into getting all the way up into here. And the reason why I'm touching it in here, because this over here is the last low before this highest point here. If I drop my time frame down to the 1 minute, you'll see it clearer. Have a look. This level in here, oops, was the last low before this highest point. But to be fair, now I've zoomed in, this was all kind of like a little bit of sideways action, a little piece in here, okay? And as soon as we saw our strategy play out, have a look at our strategy on a 1 minute time frame. Indication, yeah, closing just about below here, retracement, continuation, and then the market continued to fall. All right, now, but I'm not saying that we'll be down here on the 1 minute time frame. I'm just showing you on every time frame, because of our Russian doll theory, our strategy works on every time frame. It's not this only works on this time frame or that time frame. It's just the case that as a new trader, 1 minute, and the smaller you get with your time frames, the more volatile, the more windy, the more some random new scenario fundamentals can throw you out of sync. So like I said, as you've seen, for me personally, I've just marked up GU, and I've just marked up US 30, and I've put a alert around the consolidation. Have you noticed something? These are both the same. We've put alerts around some consolidation at the moment in both scenarios. Okay, in both scenarios, we've got these alerts around this consolidation. All right. Now, one thing I've showed you guys previously, if you're ever trading a pair and you want to know what their kind of relationship is, do they have does one pair have a relationship with the other? As I do they follow each other? Do they have a correlation? An easy way to do that is to go to this plus sign, and then you superimpose one pair on top of the other. So if I do GBP USD on top of this US 30, have a look. It's showing me one of them on top of the other. It's showing me one pair on top of the other. Watch. And then you can go to different time frames and see on what time frame do these relationships are they closest. All right. So if you can see on the 1 hour time frame, for argument's sake, you can see how this market was following each other quite closely. When this was going down, the other one was going down, going up, the other one was going up. We've seen some separations sometimes, but look, we've seen a big impulse here. We also see a big impulse on US 30, then the market pushed up for a little piece. But here we've seen more of a leveling out of US 30 consolidation going sideways. Okay, sorry, in GU, sorry, going sideways for longer from about Christmas time. US GU's been going sideways. Whereas we've seen that in US 30, we have been going sideways, but we still be making this little impulse, little pushes like so. Okay, so I'm just saying to you that you can use just that imposing it to see the correlation between the two pairs. All right, so if I remove that pair for argument's sake, watch, if I go here and I'm gonna add the Dixie on top, put a dollar index on top of the US 30. Now from where I'm standing, we can see a ever so slight inverse relationship between the dollar index and US 30, meaning when the dollar's getting stronger, we see the US 30 getting weaker. Because some people don't understand, oh, well, how do you know, Alan, how do you know that the correlations between this and this? Or how do you know that? Well, you don't need to be necessarily a connoisseur that's on Sky News constantly. You can just do it like this. You're going to say, okay, well, I can see here that when this market's going up, all right, dollar index is when the dollar's getting stronger, US 30 is getting weaker. Yeah, when the dollar's getting weaker, US 30 is getting stronger. And then you can try and justify why that is. But the bottom line is this, guys. If the dollar got cheaper and your pound buys more dollars, then you have a stronger position if you wanted to invest into the top 30 US companies. Because your pound commands more dollars. So a US market's getting a lot more attractive to foreign investors when the dollar is weaker. Does that make sense? So does somebody want me to explain it one more time? Does that make sense? That when the dollar gets stronger and your pound's only getting you, 50 cents, you're not going to be in a hurry to go and make your money kind of worth less in America. You're not going to be traveling, having a nice trip to America when your pound gets 25 cents. And you're like, you're going to take your £100 and you're going to get $250 for your money. It doesn't make you feel like you want to travel to America and you want to invest money and you don't want to start going on a shopping spree after your £100 is essentially been, you got a quarter of it in US dollar value. But you may want to do that when your £100 is actually worth $200. You're like, oh, I'm going New York shopping, because now you're feeling extra rich. Now your $100 or your $1,000 is now worth, your £1,000 is now worth $2,000. And you're like, you're in the shop doing that. Give me that one, give me that one, give me two of those. Because you're feeling like you're in a better position to invest money, to spend money in the United States of America. That's a very basic and simplistic, reason around this inverse relationship. But you see how easy we was able to do it. And you can do it with any pair by simply adding and superimposing another pair on top of it, especially if you're looking at the indexes. So straight away now, if you're looking at this dollar index and it looks to you like it might get very, very, very strong, very, 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 very bullish, all right? But then maybe your index might get bearish, maybe. So that's another way you can start using these different complements to be able to say, you know what, okay, no problem. I've been looking at this US 30 like this. Let me actually go and try and break down dollar index. Right now, like I said to you, we may be at the top of the range, but I didn't know. I wasn't too sure because I'm saying like we're in the middle of a bigger range, but we're potentially at the top of a smaller range. But maybe for me to get some more confirmation of what I think may happen is let me go and break down the dollar index from a candle perspective. Even though I can't trade the dollar by itself, all right, in Forex, okay, I can use the dollar index, okay, and I can break it down. What is this? Let's get rid of this. Remove. I can break it down from a candle perspective, just like I was going to trade it and try and come to some conclusion of what I think may or may not happen. Because if I think to myself, oh, maybe this dollar is going to get really bullish based upon the technicals, because I'm doing it with technical analysis, then maybe that's going to influence me even more to say, you know what? Yeah, it's looking like potentially the index might fall. Yeah, it's a way for me to be able to get more information, more data. And we can see the market, the dollar index was here, made a lower low, made a lower high, made a lower low. We're currently at a lower high at the moment, but we definitely have, prices broken outside of this angle of this dollar falling, okay? And it's actually started to break some structure, pushing in this direction. Okay, pushing in this direction. So if I drop my time frame down to I was on a monthly there, weekly, you can see the range, can you see the range? If I drop down to my daily, we can see the market was bullish here, it came up, touched the top of our range, boom, and then started coming down here, bearish, all right? And if I was to draw some lines, I'd have to draw the line like this. Someone's saying, Jay, why would you draw the line like this? Why there than any other place? Because this is the last high before this lowest point, yeah, offering me some level of structure. And then the market from there, broke structure bullishly, because there was structure here and here, broke structure bullishly, boom, 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 nam, 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 ate the liquidity. And then it went on a bearish run down here, but it didn't break this low. So if I was to draw this is still a higher high, higher low. And then we've seen right here, the market once again came down to a level and started to break structure on the daily time frame next. Because I'm on a daily time frame at the moment. Started breaking structure and pushing up here. Let me make this a different color, okay? Like so, all right? So if I drop to my 4-hour time frame to have a look and see what's going on, well, the market is currently trading within this swing high and this swing low, all right? And what it's done is it's broken structure bullishly. Broke some little minor structure here. Right after dancing around a lot, going sideways, consolidating in here, it broke this structure up in here, closed this imbalance that was sitting in here, and it started to actually just go sideways. All right, it's actually just started going sideways in here. Have a look here and here. It's started to go sideways. But maybe what have we just seen? Maybe what has just happened to this market? Maybe what has just happened?
It's made an indication.
Maybe it's just made an indication that it wants to go this direction. And maybe what we may see next is a retracement. That retracement might be quite deep. Why do I say that it might be quite deep?
Imbalances.
Because of the huge imbalance that we can see in here, this in between here and here. So for example, I'm going to do this. I'm going to draw an imbalance in here. I'm going to mark it. If I double click here, I've already got it set up as a template. Imbalance. And I'm going to write in here 4 hour. Yeah. Like so. And we might see a big retracement in here. But what I wouldn't want to see is I wouldn't want to see what? What wouldn't I want to see, guys? And I'll give you a clue. It's about the consolidation range. When this retraces, what wouldn't I want to see if I think the market's going to go bullish? I'll give you another clue. It's that line. It's that line. I'm giving you a clue.
Don't want to see it go for 50%.
There you go. I don't know who that was. I think that was Marcus. I really don't want to see this market when it comes down and it retraces back down here. I don't really want to see it go past this 50% level. All right. Now, when I say go past, I mean closures. We might see some wicks down here, but I don't want to see it closing down here, because then I might think to myself that the battle between the bulls, which is pushing it up, and the bears, that maybe the bulls lost that battle and this was just a liquidity grab and it's just going to start coming down here on a bigger picture. So ultimately, what I want to see is some sort of retracement in here. It might come down into this level, and then the market to start making some continuation on the basis of what? On the basis that we're in this bullish impulse here, this blue range like so. All right. So if that happens, then therefore, and this starts happening, this push up in here, then I might see the indice, whenever this happens, start to fall, because we just identified as an inverse relationship. But in between then, I am a little bit concerned by the fact that this is just pushed up over here, and there's this imbalance. Now I've just dropped to my 1 hour time frame, and I can actually see a retracement on an hour and a correction. So a correction, an indication, correction, and a continuation on our time frame. Ultimately, it has. Now, let me say something about this imbalance. There's nothing to say that it has to come and collect the imbalance now. It could come and collect it later. So the fact that I've seen this indication, this correction, this is on Friday night, and then I've seen this continuation happen, all right, this morning, etc. Maybe the market doesn't come straight back for that imbalance. Maybe it does that straight away. Pushes up into these levels straight away. Maybe. Because this is an indication, correction, continuation. And for all purposes, if somebody turned around and said to me that they took this trade here, entered at the close of this hour candle with a stop below this last low, I would understand. I'd be a bit concerned about all of this imbalance, but this is an indication, correction, and continuation. So maybe I'm going to pop an alert here. If this market just keeps pushing up there, maybe the market doesn't care about that imbalance straight away, which means that our US 30 might just start falling straight away. Might start falling first before it continues to push up. Either way, this dollar index is just a reference away for me to look at things. All right, way for me to add a confluence on. So I'll put some alerts in there. I don't know yet what's going to happen. All right, but I'm intrigued to see what may happen. So on the US 30, I placed some smaller alerts around this little consolidation range right here. All right, to see whether the market's going to first push up first before coming down, because maybe that Dixie decides to come down first before pushing up. Okay, or maybe it just breaks here bearishly and also breaks outside of this trend. Because like I said, I really want to see the market break outside of a trend also if I'm thinking about the market changing behavior. Because at the moment we're in this white range. We're doing we're sticking to the program, which is higher highs, higher lows, higher highs, higher lows within this little white range. But if it starts to break outside of here, I'm thinking to myself, maybe it wants to do something else. Yeah, maybe. Like I'd prefer this market to be even closer up to this blue range and we're getting a sell. So we'll see. At the moment, I've just set up my trap. I don't know what it's going to go and do. I've just set myself up that if it does something, I'm going to know. But I don't know what it's going to do. Yeah. Now, on the larger time frame on the 4 hour, I did say to you, we are close up to the top end of this yellow range. Have a look on this is the much bigger yellow range. However, my concern is that when I go out to a much, much bigger time frame, this might be the bigger range here and here, meaning that where we currently are is at the middle of a range, which is kind of fraff, and I don't really want to get involved in the middle of a range. But that's sort of much bigger picture. On a smaller picture, there's still opportunities. All right, let me go and find a different pick. Let's go look at Euro JPY for argument's sake. Something different. What's the time? Yeah, something different. Euro JPY. Let's go and have a look here. Have a look. Let me delete everything off it. I'm not gonna, not one I made earlier. Let's go. So we start off on our daily. Say it out loud to yourself, so you know the process, or jot it down, or reinforce it in your mind of what you do when you get to these markets. First and foremost, you want to start you want to understand what the market's been doing. I compare this to if you was investing in a company and I just came and I said, yo, Jason, I want you to invest in this company. You're going to say, okay, what does the company do? What have they done in the past? Have they made any money? Have they been in the newspapers? Have they got any media I can see, any pictures, any products I can test? You're going to ask about the history of that product. All right. It's the same principle when you're going and you're looking back at a market. So right now I'm looking back and I can understand, okay, the market's doing certain things. Then I can scoot down some more. You can zoom in a bit. When guy starts telling you about, 10 years ago we did this, you're like, okay, 10 years ago is good, but what about 3 years ago? Or what's happened in the last 3 years? That's what happens when you zoom in. You're getting a bit more of a closer picture. Okay, well, in the last 3 years, we've kind of been trading up within this range. Oh, have you? Let me even do it like this. Do it like, we've been trading up like so. I'm gonna leave it like that. All right. Okay. All right. So what else has been happening? Well, we did get up to this level over here, and then for whatever reason, prices started falling. Okay, and then since then we've seen it picking up again. Like this. This is the information that we just read in the markets. I say, okay, so prices were falling, but now they're bullish again. Yeah, over the last, however long it's been since December, we have seen bullish impulse again. Okay, the question you're asking yourself now, has this market got to the most expensive it has been in a premium? And now this is a break of structure, bearish. We've seen some wicks breaking some structure here, and this is now a lower high going to make a lower low. That's the question that you're asking yourself. Like, do you want to invest right now when this market is on the down, or do you want to invest when it's on the way up? You've got to try and work that out, because we're kind of here at this middle of the range. We pushed all the way up to here, and the question is the market finished going all the way up here, or is it going to continue pushing up here? You don't know. You don't have a crystal ball, but this is what you're trying to work out. At the moment, everything is going to plan in regards to the market. Still trading within a range. So it's quite hard for you to make a decision when it hasn't shown you any different. Because if this guy says, yeah, man, we are doing really well, we're on the up and up, you can't really say to him, no. You can't say, no, you're not on the up and up. Because he is on the up and up. He's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and there may be some more higher highs left. Just because you've drawn these little yellow lines on the screen doesn't mean that he's lying. He's not lying. Yeah, maybe this market wants to get all the way up to these previous glory days and capture some of the liquidity above here. Believe me, from where you're investing here to all the way up here is loads of pips. It is absolutely loads of pips. So you can't tell me and say you're lying, mate. Things are on the way down. No, there was a retracement, yes, but we are still trading within this range, which is a bullish range. So he's not lying to you. He's telling you the truth. And if anything, if you believe in him, at the bottom of this blue range is a good time to invest. Because at least it's cheap within this blue range. Only concern I have is it's not down here, but can't have everything in a perfect scenario. So let me zoom into that now. Have a look. I'm on my hour time frame, and on my hour time frame, you can see how the market was making some lower lows and some lower highs, like so. Okay. And currently the market is trading within this high and this low. This is the last swing high before this swing low. Now the question I'll be asking myself to find out some further information is this market going to break above this area here, which there's definitely liquidity. So I'm going to see an indication, a correction, and a continuation above this level. Or is it going to tap this level here, maybe grab liquidity and decide it wants to come down here and break outside of this blue range? These are the questions I'd be asking myself. If I was to put a line in here on a smaller time frame, it would be looking like this. Why? Touching the last low before the highest point at the moment. That's the highest point. Okay, like so. And right now we can see that the market has got to that level, and it's currently, like a lot of the other markets, doing hokey cokey. Yeah, it's currently going sideways. Yeah, it's currently going sideways in here. May come up to this level, hasn't broken this level, kind of came down, then broke structure above. If you can't see it, we drop our time frame down to the 5 minute. You know, it's kind of in this range. Yes, we've had some bearish action within that range, but it's not definitive. Because look, it's making lower lows, lower highs, lower lows, lower highs, lower lows. Now it's made a higher high. And it's come all the way down here now. So it's like, what is it doing? You know, I'm just not too sure what it's doing. Maybe this box would have been like this before. Maybe we would have drawn a box like that between that low and that high. And the market's just kind of been dancing around here. But it made an indication here, and it pushed all the way back up here to the 50% area of that range, even though it was doing some nonsense here in the morning, some little kind of fraff, little action over here. Maybe it's going to come and close down below here. Maybe, baby. I don't know. But personally, I'd be saying, look, I want to see what happens kind of outside of this range. Because of this nonsense here, I want to see this market break below here and maybe show me what it wants to do. Because it might just be stubborn, come down here and decide it wants to capture that liquidity. You just don't know. So I'm going to pop an alert below that low. It's going to ring when it gets down here, and it's going to give me some sort of insight. Remember, this is a really, really important part of trading. You know, setting things up, doing your analysis, popping your alerts in. If you're someone that's really deep, you can write notes about every single one of these. I've got you guys on a call, so it might be the most interesting call if halfway through I'm just quiet writing my notes. But there's nothing wrong in your journal to say all the information about GBP USD that you've analyzed, all the information about US 30 that you just analyzed this morning, to write down some little sentence about Euro JPY and what you may or may not do. Yeah, just so that you know where you are and you know why you thought what you thought. Right now, I'm thinking to myself, I'm asking myself the question: is this market want to push up some more up into these higher levels? Or is this market going to turn around and start breaking outside of this structure, this blue structure that I've drawn, on the basis that it came up here into these kind of sell territory, which is this yellow line, yeah, and it wants to turn around? Maybe not, because based upon how I've drawn it, let's say how badly I've drawn it, maybe it hasn't finished getting to that yellow line yet. Because based upon me putting this line here, well, it hasn't actually got up to this yellow line yet. So there's still this push. So realistically, the energy is still, you know, bullish until it's not bullish. Okay, so if that is the case, I'm looking here and I'm watching this market that, even though we're saying it's bullish, has made a retracement back within this blue range. And therefore, I'd be waiting for some sort of indication, some sort of price breaking outside of the market, which is doing here, and then potentially breaking some structure indication, some type of correction, some sort of continuation. And maybe there may be a trade on the cards there that if you wanted to take it, it might be taking it from here, placing your stop below this swing low if you wanted to, trying to target these equal highs and beyond. But personally, if you're taking it, I'd potentially probably take it a bit more aggressive than that, like so, trying to target at least these equal highs over here. All right. But is it a 10 out of 10? Not just for where we are over here. I don't like how far we are up into this range. It's not a 10, you know, at maximum it's going to be a 7 or 8. But you might see this market go and capture this liquidity above here and push all the way up to the blue line of this range, giving you a nice trade, 1 to 4, 1 to 5. And then you could decide to stay in that trade as it continues its journey up into the yellow line of that trend. Okay, we just don't know what it may not do. Hence the reason why we're popping in our alerts. Anyone want me to look at another pair real quickly and try and break it down? Does anyone want me to look at another pair quick and try and break it down? Anyone? I'll look at, if there's no give takers, I'll go to Bitcoin, have a look at Bitcoin, just because it's something different. All right, BTC USD. Again, guys, you can use what we was talking about this morning, those kind of strategies of watch. If I delete everything off this chart, you can turn and say, okay, I wonder how Bitcoin moves in correlation with the strength of the dollar. Now, if you don't know that off the top of your head, like I said to you, add it, go to Dixie, superimpose the Dixie on top of Bitcoin. It's a bit annoying, because it's on this percentage thing, I can change it. No. Try and change it. Just gonna reset. Oh, there is a way you can fix this. 1 second. Let me delete this. Let's try again. So what's happening? Because it's imposing it, but the variables are different on this axis. Sometimes it goes a bit nuts. All right. So this is Bitcoin. All right. We're looking at, and I'm trying to impose the Dixie over it. Let's try one more time. DXY. So I don't know. I don't know where it's gone. I'm not gonna lie to you. I don't know why it's not allowing me to do it. It's got some study error. Okay, there's some problem with this one. Let me add a different one. Let's try one more time. I'm just gonna cap it. Ooh. There you go. There you go. All right. So we can see Bitcoin, and we can see the dollar. All right. Now, does anybody think that they can see a correlation there between the two? So it's difficult because sometimes I can see these markets moving together. Have a look at this spike down. This spike down, and then it starts to push up. But then we've seen these markets separate, doing something different. This is going up. This is going down. Right? This is going up. And this is going down. This whole push. So I'm not sure if there's and that comes to the percentage correlation, which, guys, if you wanted to actually see in regards to Forex pairs anyway, the percentage correlation between pairs, but you can go over here to my FX book, and you can actually go to markets and go to correlation, and you can actually see a percentage correlation between pairs, you see? So that's when we're looking at, we're like, sometimes it's together, sometimes it ain't together. Why? Because the percentage correlation is only 60% or 50%. Yeah, and you can put the percentages in. Look, we can find currencies with correlations, higher than, say, for example, 80%. Oops. What's going on here? Yeah. So here, when we're looking here, for example, AUD USD and AUD CAD have a positive, because it doesn't say minus, correlation of 86.2%. Yeah, so you could say 86.2% of the time, these markets are doing the same thing. Does that make sense? Okay. Look, Euro JPY has an 87 or 89.9 and 89.5% correlation directly with CAD JPY. They're both doing the same thing, Euro JPY and CAD JPY. So if you're in a trade and you've taken a CAD JPY sell and you're taking a Euro JPY buy, especially if you're looking on a daily time frame, which is what's set here, one of them is probably going to be wrong. Let's drop our time frame down to a more relevant. Let's go to, I don't know, in regards to, let's just say, in an hour. So now you can see things have changed. Now, Euro JPY and CAD JPY have a 92.1% correlation. So, I'm not trying to say that it's a definitive fact, but if I was looking at your charts and you had a Euro JPY buy and a CAD JPY sell, I'm gonna be like, one of them looks like you're gonna take it L on it, bro. One of them looks wrong. 92.1% chance within the next hour, one of them is gonna be wrong. You see? So this is how you can help your trades. If you're taking trades on multiple pairs, maybe you go and have a little glimpse at the correlation. Maybe. I say maybe all the time because it's not a be all and end all. Have a look and put in a 15-minute time frame. Look, it's a 97.7% relationship between CAD JPY and Euro JPY. This is a big number. 97.7% is a big number. So you better either be in bias for both of them. And even if you was doing that, one would ask, why put your eggs in one basket? Because if they're wrong, you're going to lose on both of them. If you're wrong, you're going to lose on two trades. So why do that? That's not called hedging. Hedging would be that you're taking a trade against something that's going to move in the opposite direction. That's something that moves in the opposite direction of Euro JPY on the basis that maybe that one's going to outstrip the performance of your loser. And you'll be able to hedge, balance things out. Okay. Okay, so these are little tools that can be used, guys. You can use these tools to inform your decisions, but ultimately, nobody knows what the markets are going to go and do. Remember, all of this information here that's being presented to you is based upon historic information, things that have happened in the past. It's not based upon what's going to happen in the future. This hasn't got a time machine checking out what's going to happen tomorrow. This is based upon historic information, and based upon this information is subject to all of the factors that we know. Something mad can happen in the world fundamentally. War can break out. This can happen. Some news can happen. Some major company could decide that they're going under. All of a sudden, you hear Tesla's going under. Microsoft have decided that their shareholder. I don't know. Something could happen, and all of these things will change. These percentages will change because they just take into consideration historic information. All right. So let me quickly look at Bitcoin now from the perspective of actually seeing what I think it's going to do. I've been watching some interesting different quote unquote experts in Bitcoin talking about one guy was saying that he believes Bitcoin is going to go all the way down to 5,000. Okay. Before starting any type of rally again. It's very interesting. I've had a few people who are, think to themselves that Bitcoin's going to dump pretty aggressively first before doing anything. So first of all, I'm going to do a line like this, all right, on a much higher time frame basis. This is the swing low before the highest point over here, okay? Then we're going to drop our time frame down to the daily. All right, let me try and squish this together. Have a look. So it's fair to say that Bitcoin has been trading within this range. All right, that's where Bitcoin has been trading within. Bitcoin's been trading within this range since 2021. It made a bearish push all the way down here, and then it's in this range. Now at the moment, yes, we are bullish. Have a look, making some higher highs and some higher lows in Bitcoin. Yes, correct. Okay. And the market is at the top of that range. It touched to the top of that range and it had a little reaction. The question is right now, is this market going to come down here? And like I said to you, there have been people predicting that the market's going to come all the way down here and Bitcoin's going to get down to 5,000 in here before starting this bull run. All right, which is interesting. I was listening to the guy talk. That's what his prediction was. Everyone with a, has an opinion. Everyone's got an opinion. All right. But from a technical perspective, I'm looking at and I'm thinking to myself a few things. I'm thinking to myself, we're near the top of this range, but we're not at the top of this range. I'm also thinking to myself, there is a substantial amount of liquidity sitting above these levels. Okay. There's a substantial amount of liquidity above these levels. I'm also looking at it on a smaller picture. I'm thinking to myself, we are at the top of this range though, this impulse. So if I drop my time frame down here, go to my, you can probably see it on the daily. So you can see it. Have a look. Let me zoom in. Okay. I can draw a line like so. Have a look. Why have I drawn that line like that? Because it's the last low before the highest point that Bitcoin pushed up in here. And we've seen a break of that structure bearish. Look. If I was to zoom in to get, but let's just look at it like this for now. We can see that the market has broken these levels. All right, pushed all the way down here, close some imbalance, tapped in the top of this, somebody would call it previous resistance, becomes support, because the market couldn't break past this point for time until it went boom, until it brought in the Chinooks, brought in the big guns, called up his cousins, called up all the Birmingham man from, with baggy jeans and leather jackets, all of them had to come on board, yeah? To push past this little level here that the market couldn't break. They pushed past it aggressively, then started to consolidate sideways, had another little push, liquidity grab, and then started to break some structure here. And this here is now a lower low than this previous level in here. So it's made a lower low, it's made a lower high, potentially into some imbalance that we can see in here. Yeah, it's just scraping the bottom of it. So therefore it's just scraping the bottom of it. Maybe it wants to push up in there some more, really get rid of that inefficiency in the market that was formed in this imbalance here. So right now, if I was drawing some lines on a smaller time frame, I'd draw them like this. Why? Touching the last low before this highest point. And then I'd say that Bitcoin is doing what? At the moment, Bitcoin looks like it's going sideways to me at the moment once again. And even on a smaller time frame within that sideways action, it's doing more sideways stuff. Yeah, within that little graph, it was going sideways some more in here. So once again, All of these markets we can see are in this kind of consolidation kind of phase. Yeah, and that's not a coincidence. Yeah, the markets are not too sure Huaguan. So personally here, I'd be like, okay, if I was looking to be an investor in Bitcoin or a trader of Bitcoin, I'd want to see what happens. Is this market going to push outside of this consolidation block to the bullishly or bearishly? Is this market going to make a little final push up in here to try and capture this liquidity properly before deciding, yep, we want to come down? Or is it going to continue to, I don't know. Or is it going to break out here, make a lower low, lower high, start coming down here on the basis that it's just broken some structure by this push down here, making a lower low, this being a lower high, and then is it going to come and make a lower low? Because if it does break outside of this level, once I place my stop in the right place, really we should be targeting this low, and really we should be surpassing that lower low. Why should we be surpassing that lower low? Because the market moves in waves, and this would have been a lower low, this would have been a lower high. Oops, the wrong one. This would have been a lower low, this would have been a lower high, and I'm expecting to see it come to at least this equal low. That's our first target, but ultimately make a lower low again. How long it's going to take to do that, how much retracements is going to do that, whether it's going to do it, consolidate, take a week, who knows? All right, but that might be the scenario right now, but we don't know. Hence the reason why I've placed my alerts, as you can see these dotted lines, either side of this current consolidation. Does that analysis make sense? Am I losing somebody when I'm rambling on my analysis, or is somebody whilst I'm doing it going, I can see that. Whether or not you can see it as quickly as me when I'm doing it, and it would have taken you a bit longer, when I'm actually doing it, identify, does somebody go, I see it, or is there still a bit of question marks about something? Is somebody still figuring themselves?
Definitely seeing it.
Anybody else? Is anybody else seeing it and understanding this Russian doll theory, how I start off on my higher time frame and try and break down the stories of these higher time frames and shuffle my way down? Because sometimes you're looking at this lower time frame.
Absolutely.
Yes, wicked. So you're looking at these lower time frames and you're like, oh, this is bullish. But on the higher time frame, you've seen a huge imbalance. And that's the reason why it's bullish. After it finishes closing that higher time frame imbalance, it's going to do something. It's going to do what a higher time frame wants to do, which is ultimately go down. But you're looking at a smaller time frame saying, yep, bullish, this is going to go to the moon. I'm investing in Bitcoin right now. But what you don't know is Bitcoin is going to come up here, close it in balance, and then do what the higher time frames, which have dominion over the lower time frames, are going to do. Let's see what's ringing. EJ. Let's go and have a look at our EJ ring. I'm going to zoom in and see why it's ringing. And this is why I do put my alerts, because my alerts are like my little AI. They're my little algorithms. They're out there scanning the markets, and when something happens, they let me know. Because without that alert, I wouldn't know that right now, EJ is breaking that little low here. Now, the only reason why it's a bit of fraff, because the market was making some nice lower lows and lower highs, and it did this. Broke structure, made an indication it wanted to go in this direction on the 15-minute time frame, and then came all the way and turned its life around. So right about now, I would like to see an indication below this wick low, some sort of correction and some sort of continuation. Let me drop my time frame down to 5 minutes and have a look. So can you see? Just pushing up, and then decided that it just wants to go in opposite direction. So I'd like to see something happen in regards to indication, correction, continuation before I get involved. At the moment, we're just dancing at the bottom of that range. I'm going to pop another alert in a little bit lower down and have a look at it. But it's very, very important for the people that said they can understand how I trade and how we break this down from the higher time frame. It's important, because if not, and you're just in here in the 5-minute time frame, you're just like, oh yeah, the market is bearish, it's going down. But what you don't know is coming to hit the ceiling of one of these bigger structure. If I put this guy in here, this guy can't do anything outside of the size of this structure. Do you understand? When he hits his head on the top of this, he's going to get ouch. Can't do nothing apart from turn around. US 30, you see how everything starts ringing at the same time? Let me say something to you as well. That is also not a coincidence. Look, it's now the market started to move. Now at 9:15, for whatever reason, the market started to break outside of some ranges. Okay? So we had one just ringing right now, which is our US 30. Let's see what's going on there. Let's see why it's ringing. Because it's breaking down bearishly. Just pushed its head out of that very tight consolidation that was in here. So personally on the US 30, and have a look also We're near the bottom of this range, which is quite interesting. These two white lines here, if you can't see it, I mean this one and this one. Okay. And we've had a little push here. That could just be it. Look, right now, let's see it pushing. That could just be a liquidity grab. So I'm not getting excited now. I'm not going to hit the button. I still need to see what I need to see, which is ICC, BRE, break, retracement, break again, indication, correction, continuation. So right now I'm looking at it and I'm wondering what's going to happen. I can pop a little alert above here if I want to glimpse away. I don't want to miss something on a smaller time frame. Like I said, I don't think you guys should be any smaller than 5 minutes, all right? And EJ was also ringing. EJ is also breaking down it. Let's have a look at something. You ready? What have we been looking at today? We've been looking at those correlations. Let me superimpose EJ on top of US 30. Now I know what's going to come up, but I'm just showing you guys. I'm looking at it on a 50-minute time frame. Let me zoom out a bit on a 1 hour time frame. Can we see any type of correlation in between these two? Let me zoom out a bit. Well, we can sometimes, and sometimes we can't. All right, we can see that the market's moving in one direction together, and sometimes making a bit of a separation. That just comes down to the percentage correlation between the two. And to be fair, there's no real reason why they should have that much of a correlation. One's European euro, and one's the Japanese yen, another one Japanese yen, and the other one's American companies. All right, but there is some relationship, but not necessarily a 99.2% relationship. All right, but it was just interesting that they both started alerting at the same time. All right, so have a look here. We've got some indication here, but on the 5 minute time frame, we haven't got a closure yet outside of this level. Yeah, on the 5 minute time frame, yes, we've got a push, an indication. Let me move this up here, make it tighter. We've got an indication here. It hasn't got a closure yet. We've got 1 minute for the closure. On a smaller time frame, yes, 1 minute candles have closed. See? 1 minute candles have closed, and we may be just about to get a correction here on the 1 minute time frame, but I really don't want you guys on the 1 minute time frame. I'm sorry. I prefer you on the 5 minute. All right. Unless you guys are more advanced and you're really, really comfortable with the strategy. Okay. So on this 1 minute time frame, maybe this was a little bit of a correction. Maybe the 1 minute's coming down here to continue. Maybe. It's a really big push here that's happening at the moment. So even if this is a 1 minute time frame, the closure is going to be all the way down here, which is a problem because of this imbalance. So maybe it's better that we just stay on the 5 minute time frame, wait for this to close in the next 25 seconds, and then see if we're going to get some sort of correction and continuation. Because remember, have a look left. What can we see left of a reason why this market might be reaching? What can we see? Somebody knows. Somebody other than me knows. Well, we can see imbalance. We can see an imbalance in here that maybe the market's just reaching down there to close the imbalance before it decides to shoot up and go to the moon. Because somebody owes them some money down here and it's going to come and collect all of that money before it decides to just burst in the opposite direction. Because we are still at the bottom of our larger Russian doll. Can you see that white line? This is still the bottom of that larger Russian doll. So maybe we're just going to whip down here and then start going to the moon. Maybe. Maybe, baby. The only way we can know what we're going to do is to see whether this market now makes a correction and continuation down, or whether it makes a correction and then starts breaking structure bullishly. Do you understand what I'm saying? So over here, we can see in here the market's like so, making this angle, and we make this smaller, thinner, pushing down. All right. Why have I drawn this line like this? Well, I've drawn this line like this because I'm touching that last little high before this lowest point. And the question I'm asking is this market now going to come up here and then can close back down here? Or are we going to start breaking this minor structure? I am on the 1 minute just to show you, which I do say I don't want you on the 1 minute. I'm just showing you here. Are we going to break this structure up here, start making indication, correction, continuation? Then are we going to get past the 50% level of that previous consolidation, which is going to be another landmark? And if it does that, well then I'm believing it's going in that direction up there. All right. But watching it. This is what you call reading and reacting to the candles. on a 5-minute time frame, look, we had a lovely 5-minute close, and now we're getting a potential correction, potentially going to close this imbalance. We just don't know whether or not it's going to keep going this direction or close down here. So this is a really good example that if you guys are able to be in front of your charts, you can watch this, see what it does. See US 30, see what it does. I'm a bit concerned that we're at the bottom of that white range. This could just be a liquidity grab, boing, for it to push all the way. Let me zoom out to show you. Bottom of this white range could just be liquidity grab here before it makes another journey up into these levels for equal heights and the liquidity there. But at the same time, I'm going to trade what I see. I'm not going to make it up, because this market has broken some minor 5-minute structure, but it hasn't broken this swing 15-minute level here. So the market's trading within here and here, meaning that the market is still bullish, making higher highs, higher lows, higher highs. And if it decides to turn around right now, that's going to be a higher low, making its way in this direction. You see, this is all about understanding this, where you are in this bigger picture. Yes, you're bullish coming up here, bullish, 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 well, bullish. But when you hit the top of this ceiling of this, your bigger structure, you've got to think to yourself, boy, I don't know if this little guy is going to push past these big guys. I just don't know. Yeah. So that's where we're at with things right now. On a smaller time frame, let's have a look again. 5 minutes made a little bit of a retracement in here. Hasn't quite closed down below. I've got an alert there to alert me anyway. That's my eyes. And Euro JPY, same. It's broken outside the structure bearishly. The question is, let's have a look at the larger structure here so we know what's happening with Euro JPY. But with Euro JPY, the issue is for me is that we've come and we touched the bottom of this range. We pushed up here and we've broken outside of this range, maybe on the basis that we want to accelerate back up. So we've broken outside of this range. We haven't broken this structure up here yet, but we're pushing down. Is this just a liquidity grab? Or does this market, has it had enough of pushing up and going this direction? Am I going to break outside of this blue range? Let's look at it on a larger time frame. On a larger time frame, this made a lower low, breaking some minor structure, and this could be considered a lower high. And maybe the next thing this EJ wants to do is come down here and make a lower low again. Maybe. All we can do is trade what we see. Cannot trade what we don't see, and we cannot guess. But what I can say is this market has just made a bearish push out of some kind of frothy structure. Yeah, I say frothy structure because of this. It was coming down here. I would have just said it's bearish. I would have said this market's making out of this little consolidation here. Have a look. Out of this little consolidation here, I would have said this market's just bearish. Making lower lows, lower highs, lower lows, lower highs, lower lows. But then it came and made a higher high. And now it's making a lower low. So it's a bit like, yeah, what is it doing? So I would like to see some sort of, in regards to this, retracement, a correction and confirmation to confirm what it wants to do bearishly, or whether it's going to start pushing back up here. And this is just a liquidity grab once again, capturing some imbalance that's sitting in here, tapping into an order block that's sitting here. And maybe the market wants to go and rise like that. I do not know. But what I do know, I can put my alerts in. I'll put one above price. I'll put one below that kind of in this structure in here, because this is still structure. Just pop it in here if it starts to really push down. And why am I doing that? Because I can't keep my eyes on all things at all times. All right, I'm gonna have to take my eyes off this. Have a look. We've got this indication. We currently got the C is currently happening off our ICC, and we're just wondering, is this gonna continue and close down below here? Or on a smaller time frame, is this market going to start breaking structure bullishly because it's at the bottom of a range and we know that we want to buy at the bottom of the range? Let me say that again. We're at the bottom of this white range and we know that we buy at the bottom of a range. But the concern is whether or not this market is making lower lows and wants to come down here and trade back within this blue range. We do not know on a smaller time frame. We don't know if that point here is the highest point or whether this market wants to push all the way back up into here. Or does the market want to, let me delete this. Does this market now want to, is tap the top under this blue line? I hope you can see the blue dash line I'm talking about. And maybe it wants to come back down now and tap the bottom of this blue dash line. And then it wants to get back up in here. Then it wants to get back down in here. And then it wants to get back up in here. I don't know. I just don't know. But take comfort in me saying I don't know. Me don't know doesn't mean I don't have a clue what I'm doing. I'm just saying to you, there's no way of knowing. There's a way you can have a bias, and there's ways if certain things happen, you're going to make this decision, but you don't know. And that is why when I take this trade, I'm going to make sure that it's well within my risk. Because if I knew, I'd risk 100% on my money. Yeah, I'd risk my last pound if I knew what it was going to go and do. But I don't know what it's going to go and do. I only have these opinions based upon my education. So therefore, I have to be nimble. I have to watch. I have to make decisions based upon the information given to me. EJ's broken outside of here. Is this just a liquidity grab? Or is this going to come back up here, close some smaller imbalances and start coming down here? I do not know. There is still some more imbalance down here. And I haven't even looked at the news. Let's have a look at the actual news. I haven't even looked to see if there is some serious news happening that might influence some of those pairs. Let's have a look on the economic calendar. It's Monday, which is already a bit of a iffy day because it's trying to play catch up to the weekend. And we can see some red folder euro news that happened already. We can see some more today. We can see red folder CAD news, red folder USD news. So there is some red folder news that may affect our US 30. And we've seen some red folder news here in the euro earlier today. Euro JPY. Oh yeah, and we're getting some Fed Bostic speech. I'm not too sure what's going on there. But guys, we're going to finish up right now. Normally we've got Al here to give us a little breakdown of the fundamentals. I don't know any fundamentals. We're getting up GBP in 1 minute. We're getting some high red folder news. Let's go and look at GJ real quickly before we finish up. All right. Real quick, just to see if we see a reaction to that news. Just so we can watch it. GJ and EJ are probably doing something very, very similar. You'll be able to check that on the correlations charts also. Let's have a look. GBP, JPY. Oops, what's going on there? GBP. Let's have a look. New red folder news just coming out just now. Let's see if that has any impact. It says 1 minute. It's coming out. So we're going to finish off with this red folder news just to see if it has a reaction, just to see what happens. And we can also quickly have a look here. Have a look. I'm going to duplicate this real quick. I'm going to go to my markets real quick. Go to my correlations. Go to my correlations real quick. I'm going to go really, really small in here. Let's just say even 5 minutes. Let's say show me correlations higher than, let's say 80%. And let's go EJ and let's scroll all the way down on EJ and get to GJ. It has an 85.1% positive correlation, meaning it does the same thing. We've already marked up EJ. Yeah, you know, so at the end of the day, we've just broken outside of here. EJ and GJ may have a reaction. We've seen this push here in our GJ. Yeah, and that push down here is causing imbalances. Maybe that news that's going to come out in probably 10 seconds, maybe we'll see a big retracement in it to come and close some imbalance. Maybe. Or maybe it will go straight away and start breaking some structure. All right, let's see. I'm going to split this screen real quick. Oh, look at the push up. Let's split this screen real quick. Over here, we got GJ, and over here, I want EJ. Let's have a look. I hope you guys can see the way I'm manipulating my charts. I'm using multiple different, bits of information for Confluence. I'm taking into consideration news. These are all the things you have to do as a trader. Yeah, there's all the things you have to do as a trader. And it sounds like a lot, but it's not. After a while, it just gets to be like standard. Like it gets to be like normal that you're going to go and check the news. It gets to be normal that you look at the Dixie. It gets to be normal that you break things down and look at the higher time frame. It doesn't get to be, oh my gosh, there's so much to think about. No, so much to think about when you drive a car. You got to do mirror, signal, maneuver, clutch, accelerator, brake, play with the radio, shout at the kids. You understand what I'm saying? You've got to do all those things at the same time, and you still manage to navigate in your vehicle from A to B. It's the same. All right. So that news should have come out now. Let's have a look. It did come out. It came at a better than expected result, plus 0.5. And we haven't had a huge reaction to that news. And sometimes you say, why is that then, Jay? Because maybe it's already been priced in. We're not the only person that knew that news was going to come out. So what about the whole room full of fundamental analysts, all right, that have said, yeah, more than likely it's going to come out like this, because they've researched it. They've actually researched that bit of red folder news. They actually researched the S&P Global CIPS service, PMI, and they've already come to the conclusion of what this should be. And therefore, these institutions have already, priced them in, all right? But let's go back to this US 30, have a look. We had that indication, we had a correction. Is this our continuation happening? Maybe. It's maybe our continuation happening. I'm still a bit concerned about the bottom of this range, but maybe it is. I'm not going to get too fast. I don't want to drop my time frame down to 1 minute, because on a smaller time frame, we may be able to get an early entry, but in here it's unnecessary. I want to leave it at 5 minutes. It's unnecessary to get involved. And from a GJ perspective or EJ perspective, which is this one over here, we saw a break outside of an indication outside of the range. We're getting some sort of correction at the moment. Where might that correction be going? Have a look. Let's go to my 10 minutes. Let's go to my 15 minutes. There's lots of imbalances in here. That correction can go all the way back up in here if it wants to. Once it doesn't break past the 50% kind of the range, I'm still thinking to myself, there's a possibility that market could come and be bearish. All right. So that's it. That's my breakdown, guys. It'd be nice to say that we hit the button, but like I said, it's not every single time you sit in front of the charts you can hit the button. I've analyzed it. I've put my alerts in here. I'm going to pop another alert just below this level here. If the market comes and closes down below on that EJ, to let me know that we've had a continuation. On the US 30 also, I had an alert up here where the market didn't quite trigger, but I'm going to pop another alert down here, just below that level, to say the market's continuing to push down. And I may choose to get involved. I may do. All right. We are in this imbalance and we haven't quite closed all of it, but we've gone past 50% of it. Like I said to you, it might be the case that this market now is breaking outside of this range and it's going to start to do something down here and push down here. What is it doing on the larger time frame? The larger time frame is pushing down to this blue line. You see when we're in here, we don't even know why Jay's saying that it might break down here and that he might get into the sell. As soon as I zoom out, well, he might get down into the sell, because if we're doing ping pong, ping, pong, ping, pong, ping, Jay might be expecting pong back down to this blue line. You see? And at least down to structure over here. And believe me, from where we currently are to structure down here is on US 30, 230 pips. And believe me, if you caught 230 pips today with a good entry, you'd be a happy bunny. Guys, good morning, good morning, good morning. It's Monday. Thank you for your time, your presence. Any questions about anything? Any questions about anything? If there's no questions, guys, I'm going to start putting out some market material about our United challenge. This is going to be a funded challenge that we're going to do together. Have accountability. Whichever account size you want to buy is down to you and your financial situation, but we're going to actually be taking trades and holding each other accountable when someone says they're taking a trade. And when someone says they're up 3% and we say, okay, we'll shut your computer and go to sleep, we're going to actually hold them accountable for that, etc., so that we can all actually go and pass our challenge together. So I'll put some marketing about that. I mean, my aim was to try and start doing it by kind of mid-February. I don't know whether it's best to give people the month to save some money if they need to, or for them to get prepared and really start using their demo account first and foremost to be able to break down the demo accounts and make some returns on the demo account before they feel a lot more confident of getting down into the actual real live charts. I don't know. We shall see, and we will take a little vote, get some feedback. But for now, guys, I'm going to put something positive, something we can watch this morning. Should we? We put something positive that we can watch this morning, something of interest. All right, we're going to talk. It's something more general. We can either watch the Epstein files. I don't know if anybody's interested in the Epstein, or we can watch something motivational from Jim Rohn, which is focus on yourself, not others. Or we can watch something from the Diary of a CEO, which is how transform your life at a moment. An alcoholic lawyer that completely transformed his life and became the fittest man on the planet. Which one sounds good to anybody? I have a Jim Rohn positive stuff, focus on yourself, not others. The Epstein files, so we get into Jeff Epstein and what he was up to, all right? Or something about
focus on yourself, but I'm open to debate.
Focus on yourself, or I changed my life at 40. Let's go focus on yourself and have something motivational. And just so you can hear in the background, if you are working or you're doing something like that, you can hear something. And it might not be everything that's said in the video, but it might be that Jim Rohn says one thing, all right, that just resonates with you personally, and that may change the trajectory of your entire life, or at least your day. Yeah, today it might change the trajectory of him saying one thing that you go, that one hit, yeah, and that might make you do so, right? US 30's ringing in from crossing down, guys. So you can have a look at that in a minute, and I'll give you a trade update later if I can. And EJ's breaking structure as well. All right, guys. Good morning. God bless. Have a great day, and let's play some of this Jim Rohn.